Okay. Yeah, so the summer allowance, no, they have been here, but at least now things are so set. So for the summer allowance now, summer allowance received was 180,000, and I said you keep this calculation here on the side, yeah, and then remember we were reading. We said within the information they told us that the Shipota cut will go for 260,000 rand inclusive of that, and that amount will help us determine like the team rates, which we will use to calculate our team costs. So in terms of the 360,000, as I said before, that it is above 285,000, but less than 380,000. So the fixed cost will be 94,871. And I said that the 94,871, you divide by your total kilometers, which is 47,072. Yeah. And after that, you get a figure, which is divided by 47,072, which is 2,015. So this amount is in rands now, but for the purposes like of how you guys are answering in terms of how they mark, just leave this amount, although it's in rands, leave it at 3 decimal places. Although it's in rands, I know, but just leave it at 3 decimal places. So you'll have 2 point, because like these decimal places change a lot when it comes to your calculation. So just leave it at 3 decimal places. Now the other sections of of the deemed rates are the fuel cost and the maintenance cost. Now the fuel cost and the maintenance cost are annotated in cents. So the fuel cost and the maintenance cost are measured in cents, I mean. So what we'll do is that we'll convert these cents to rands, but still we'll still use 3 decimal places to represent them. So in terms of the table now, it is actually 135.8 cents in terms of fuel cost. So what we're gonna do is these are fuel cost. I don't know what fuel is. So it's gonna be 135.8 divided by 100. Yeah, because it's cents converting to rands. Yeah, equals 1,358. Remember that you please still leave like decimal at three places, although it's in rands for this case for the team rates. So it would be 1.358. Then you have your maintenance costs, which will be in terms of the table 58.1. It's in cents, and you still divide this by 100 to get the rand amount. Which is 0,581. Now remember what I said in my framework. You'll have to aggregate these rates to get one rate. So the aggregated rate will be equal to the aggregation of 2.015 plus 1.358 plus 0,581 equals 3,954. And remember in terms of the process that I described on the slides, you have to multiply this by your business kilometers only. Also guys, for the guys that are in this session, please contact me directly. I'll send you those slides. I'll send you them directly if you contact me directly. So in terms of this 3,954, I did say that you'll multiply it by your business kilometers. So what are your business kilometers? They are 32,485. So it will simply be 3. Remember that we are calculating our business our deemed cost for business purposes here. Ne? Just remember that. I don't want you to get lost. This is what we're calculating here. So you have your 3,954 times your business kilometers, which are 32,485, and that will give you equals to 128,446. And remember, in terms of the formula, the taxable allowance to be included in gross income. Not gross income, in taxable income. Sorry, because taxable allowances are right after deductions. So the amount to be included in taxable income will be your taxable allowance received for the year minus your deemed business costs. So let's calculate that. So simply be 180 minus your deemed business costs, which are 128,446. And that will give you an amount of 51,554. And that is the amount that will be included in your taxable income. Now let's go to for deemed business cost purposes. Now let's go to our actual business costs. Actual business costs. So let me just do this. So the actual business costs, I'm just gonna do them here. So remember that we have records of the actual expenditure, and remember that your actual expenditure is your don't forget your wear and tear and the other expenses that have records for them. So let's start with our wear and tear. Also, within this case, the wear and tear is also inclusive of VAT. Yeah? Please remember that the costs used to calculate the wear and tear is also inclusive of VAT. So what we'll do here is that we'll simply take 360,000. Yeah, no. Simply take 360,000 divided by 7, which will be equal to 51,429 for the year. Then after, what you'll do, you'll simply add these costs. But remember the substance of these costs, because they are telling us that there are no further maintenance costs incurred. But let's start with our fuel, yeah, which is 21,864. 864. Then our license fees. So I'm gonna write license here for space. Oh, no, I can't. So our license fees will be 500 rand, and all of these costs have expense records, yeah? Accurate expense records. If they don't, you don't include them in this calculations, because there's no way that SARS can verify that these costs were actually incurred. That's the reason why. Then after, remember that we still haven't included anything in taxable income. These are just calculations on the side. So after, you'll have your insurance, which will be 22,800. And then you'll have your, okay, the tires are the principle that I told you about, where you look at the substance of what they are. You replacing tires is like maintenance of the car. So the tires are actually maintenance costs. Although they said that no further maintenance costs were incurred in the scenario. These tires are in substance maintenance costs, and 8,580. Then do as we did above on the right here, we'll aggregate into one cost amount. It's not a rate this time. We'll aggregate into one cost amount. So what is it? Aggregate cost going to be? Equals to 51,429 plus 21,864 license fees, and then plus 500 plus 22,800 plus 8,530 equals 105, 123. 105, 123. Now, what I want to do with this 105, 123, remember in terms of our actual costs, actual business costs, we multiply them by our business kilometers over our total kilometers. So what our business kilometers is 32,485 divided by 47,072. So this will give you an amount of 72,547. So you can even calculate with me if you want, I don't know. But yeah, this will give you an amount of 72,547. And with this amount, remember our formula. In terms of actual business cost, the travel allowance to be included is equals to, also for this actual cost is 180 because she received 180 minus 72,547, yeah, maybe equals to 7,453. Now let's compare the benefits for the taxpayer. This is what I meant, that you include the travel allowance or the method which is of most benefit to the taxpayer. The most benefit of taxpayer is the lowest amount to be included. What is the lowest amount to be included? It will be 51,554. So in terms of this travel allowance, what should include in taxable income? Inclusion. Will include 51,554. Yes. So now we can move on. You can answer the questions at the end of this session. So let me just finish this. So Pressure studied Bcom finance at the University of Johannesburg and has remained a loyal supporter of her alma mater. She made a donation of 150,000 rand to them and received a session 18A certificate from them. Now the thing is, we have to consider this at the end, yeah, after we have considered our section 11F deduction. So for now, you can leave this, but if you wanted to, you could have made a section here for donations, section 18A, because you'll deal with it later. So let me just do it. The reason I'm postponing this because you must consider this like when you have like your total taxable income at the end, yeah. So yeah, you could have done that also if you wanted to. So let's continue with the question. We see donations later. Now, interest from the money market account with one of the major banks in South Africa amounting to 22,820 rand, and interest from a tax-free investment amounting to 2,264 rand. So we know that this will be included in gross income because as per the paragraphs under gross income definition, we'll have to include this amount in gross income because they may be viewed as capital in nature and not initially included in terms of a definition, but it will be included in terms of the paragraphs under the gross income definition. This makes sense. So what I'll do is have to set up the gross income thing again. What you'll do is you'll have the interest from the money market account, which is 22,840. Yeah, I'm sorry, let me just write. And then you'll have your interest from your tax-free investment. I suggest that you distinguish between the two types of interest because they have two different treatments in terms of exemptions. Yeah, well, so just distinguish between these two. Investment, yeah? And you'll include 2,264. 164. So as you've included 2,264, there are also dividends that you received. And remember what I said about the dividends that you received. You received them as a net amount, unless they tell you otherwise. Unless they tell you that it is the cost amount, you receive them as a net amount. You receive them as a net amount. So what you'll have to do is that you'll reverse. You have to reverse this amount to the point where it includes the 20% that was taken out as a result of dividends withholding tax and held by the company that issued the dividend. So what you'll do is that for the dividends, you simply dividends. But for dividends, we'll simply take the 47,746 divided by 80 shift percent. Then your answer will be 59,683. 683. So that will be your answer for your dividends. Now, okay, before we move on to this rental income, yeah, you know that these three all have exemptions. So as I said, I said that you compartmentalize now your sections of the tax payable. I will suggest that you just erase this. So I was just showing you that you can also do it yourself, but you'll have to have your exempt income here. Now, in terms of interest income, remember what I told you? When someone is less than 65, it will be 23,800. And Precious, remember, in the scenario, she's 46 years old, so she'll qualify for the exemption of 23,800, but it's limited to 22,840. SARS is ruthless. Remember, they'll never allow you to deduct more than what you actually received, exempt more than what you actually received in interest income. So yeah, interest exemption. My interest exemption would be 22,840. A clear reason why I separated these two types of interest because like they're exempt in terms of two different sections. So interest is exempt in terms of section 10(1)(I). Yeah. Then interest from a tax-free investment is exempt in terms of 12T. So we have to exempt this interest from the tax-free investment. Which will be 2,264, and both of them will be exempt. So let's move on. Now, in terms of the dividends, exemption, you will exempt the full amount. Unless it was foreign, then you'd exempt it based on the right apportionment. In terms of individuals, is 25 or 45, then companies have a different apportionment. But these didn't say anything about these dividends being foreign, so you exempt the full amount. Let me just show you here. So it didn't say anything about dividends being, there are South African dividends paid, so you'll exempt the full amount. So in terms of the interest, you know, yeah, the interest value in terms of the tax-free investment was exempt in terms of section 12T. Then the interest exemption that is not from a tax-free investment is in terms of section 10I, and I think that is in your notes. So moving on. Rental income amounting to the 280,000 rand and from investment property she owns. So remember we said this is revenue in nature. Although they are saying investment property, she is earning rental income from it. So she's carrying on a trade. So the 180,000 rand in full will be included in gross income. In full 180,000. Now let's move on. Now she incurred the following expenses that can be directly related to investment property. So expenses related to the property on which she was carrying on a trade, which is revenue in nature. So since she incurred these expenses, we should distinguish if they are in the production of income or they are just adding to a capital structure, as I discussed this in the slides which I produced. So in terms of interest on a mortgage bond amounting to 25,467, yes, this interest is incurred in the production of income. It is not uh, uh, improving or creating a capital structure, because for you to continue with 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 the property, you must pay this interest. So it is in the production of income, because without paying this interest, you can't continue to produce income. So let me just start my deduction section. But you can get the point that I was trying to put across here, like the compartmentalization. You see, it is easy when you do this. Is that I'm doing like this at this rate so that you understand what I'm doing. But you can actually do this way faster if you compartmentalize. Yeah. So in terms of the deductions, what was the amount? It was 25,467. Yeah. So with me for now. Then in terms of the property taxes and levies amounting to 30,567, without paying your property taxes, you will have to you won't be able to produce income. So it is valid that this property tax isn't a portion of income, so it will be a deduction. Hey, what do I do here now? Do this. So in terms of the this deduction, let me just erase this. So it will be your interest on mortgage bond. Sorry for this. Just I should do this much more faster. On mortgage bond will be 25,467, which will be taxed, and it's taxed in terms of section 11A. But as I said, they really don't care about you knowing the sections in terms of here. You completed here, so it's fine. So in terms of property taxes and levies amounting to 88,567. Yeah, we did say that they are in the production of income, so you'll have to include them under your deductions. So levies, shift, and taxes. You'll have to include the amount of 38,567 amount here. Is in the production of income. Now, when it comes to the renovations amounting to 165,900 rand, to add an additional bathroom, which will make the property a lot more marketable when sold. You can see that in this case, you are improving the capital structure, thus you will not serve as deduction. As you know that capital assets have their own deductions in the form of capital allowances, so you will not put this under your deduction section. So just move on. So they said then assessed loss, yeah, while has been brought forward from the 2021 year of assessment. So remember what I said? I said that cost income minus exempt income less the deductions, and then after you've done these three components, that's when you deduct your assessed loss. But unfortunately, as you remember, my my other calculations have been deleted as a result of like Zoom technical difficulties. So I won't be able to show you the calculation, but it's not difficult. You just have to aggregate these three. The principle is that you aggregate these three before you deduct your assessed loss, and the assessed loss was 165,870 from the 2021 year of assessment. Then you'd have gotten a subtotal here, like a different subtotal under your deductions or the taxable income at that point, as I had explained on the slides. Now let's move on to our capital assets and the realized capital gain. So in terms of the capital gain realized, yeah, I'll have to erase these other ones. I have to erase this one here. So in terms of the capital gains realized now, I might tell you that they might tell you that this is a capital gain that they realized, but they didn't tell you that it's a taxable capital gain. And remember, I told you that if they told you this, you have to calculate the net, I mean taxable capital gain. Sorry about that. That will simply be equal to, you should know your roles here in terms of individuals, be equal to 192,450, yeah, minus the, what is this? Minus the 40,000 rand exclusion and exclusion, yeah. multiply by 40 shift percent. It will give you an amount of 60,980. And then lastly, you are aware that the total of employees tax and deduction from during the year of assessment amounted to 240,000, and the first and second provisional tax payments amounted to 10,214, 8,460. So we are saying that taxable income. Né? These amounts we deal with them when we are calculating tax payable. Né? And they'll be easy to deal with, honestly. They are not like a hard thing to do. Let me just do the section 11F deduction. Please bear in mind that like me doing this section 11F deduction, I'm not gonna use like the totals because my data got deleted. So but the info that I produced, the data that I produced got deleted. So what I'm gonna do is that I'm just gonna show you the deduction that should be made and the limits. But I showed you the limits on the slide. So I'm just gonna do that for this. I won't consider the totals, but I'll also show you like what makes up the totals. Because there are totals that are self-explanatory, and there's one that you like the remuneration from the employer. There's one where you where you where you might get confused. There's this let's use this. So contributions made to retirement funds are allowed a deduction in terms of section 11F. Note the contributions made by both the employer and employee are allowed as a deduction. So let me show you what I meant here. So remember the employee and the employer made contributions. So you have to calculate the you have to calculate the contributions for the two. This is like the important part where they can catch you off. Like just know that it is always both the employer and the employee's contributions that qualify as deduction. If you know this, like it will be better. Then after there'll be a limit, but I'll also explain the limit to you. So employee, so it'll be so 1 year, how much do we contribute? Uh, okay, this is a medical scheme, retirement. Okay, remember that they contributed each 8%. Yeah, well, so I'm just gonna make it quick. It's gonna be 15 shift percent times 1,020,000, 1, 2, 3, yeah, shift plus, and what was it, 10,450, where she contributed to a retirement annuity fund, 400, I mean, 10,400 times 12. And that will give us an amount of 288,000. Now this amount will be a deduction, but it is limited to 350,000 rand or 27.5% of the higher of remuneration from the employer, including the travel allowance at 80%. These ones are they are self-explanatory. But let me just show you this one, what I mean here. So wait, should I delete the cost income? So what I'm saying is that in terms of this remuneration from the employer, all the amounts in cost income that are from the employer, that is like the amount that you will multiply by 27.5%. But also you'll include the travel allowance, which is the 51,440. You will include that travel allowance at 80%. Then you'll multiply that by 27.5%. Then you'll get the higher of between the two. In this case, the higher of was the remuneration. Then you had a taxable income before inclusion of the capital gain. So because of me deleting my data, I couldn't like get to the taxable income before the inclusion of the taxable capital gain. But I'm sure you understand what I mean here. So the 288,000 all in all was less than 350,000 rand, and it was less than this remuneration, and it was less than the taxable income before inclusion of the taxable capital gain. I'm just giving you because I've done this question. I understand this question. So it was the lesser of the three. So the full amount was deductible. You can confirm it on the solution. I'm sure you have the solution on Blackboard or something. You can confirm that on the solution. It was 288,000. So that was gonna be deducted for section 11F purposes. Yeah. That's deducted for section 11F. But I just want you to understand that this is important to understand that like because the rest are self-explanatory. This remuneration is from the employer and it's all the amounts from the employer. Then you just include the travel allowance at 80%, and that's the amount that you'll multiply by 27.5%. The rest are self-explanatory. So let me continue. Okay. Okay, most of everything is done. I'm just gonna go back to the section 18A deduction. The thing is, the section 18A deduction, I didn't do it completely because remember that it is limited to 10% of the taxable income before donations. So the taxable income before donations, remember that the whole slides are a framework. So after this retirement fund contribution slide, it is this way even in your answer. After that, you'll get your donations deduction. And then it will be limited to 10% of taxable income before the donations deduction. So it'll be limited to 10% of the taxable income calculated after considering your retirement fund contributions. Then you'll get the donations that are allowable. So in this case, the donation that was allowable was less than the actual donation amount. It was less than the actual donation amount. So this 10% had an effect. So you must not assume that this 10% would always be above the donations that were allowed as a deduction. In this case, the 10% was lower than the donation that allowed as a deduction, and as a result, the donations deduction in section 18A was limited to this amount of 10% of the taxable income before the donations deductions, or in other words, the taxable income after considering your retirement fund contributions or section 11F deduction. Then I'm almost done. I just want to show you something in terms of the tax payable. So remember, so I'll just continue. Remember that after taxable income is calculated, you then proceed to calculate the tax payable using the relevant tax tables. Tax tables are in your textbooks, helped textbooks which you have, and they'll also be given to you in the test. But yeah, you would have calculated the tax payable. But there are important things that I wanted to consider in terms of this test question. So remember, after the tax tables, you consider a primary rebate. Remember that I said that it is applied in aggregation. So let's check Precious' age in this case. Okay, I remember that she was 46. Precious is 46 in this case. So she's under the age of of 65. So only the primary rebate will apply to her. Only the primary rebate will apply to her because she's under the age of 65. If she was 65 years and older, it would be both the primary and secondary rebate. And if she was 75 years or older, it would be all three, the primary, secondary, and remember here, tertiary rebate. So in this case, the primary rebate name is 15,714. It would have been deducted from your tax payable, which was calculated here. Okay. And don't worry, the section 6A, I'm gonna do that calculation with you. And in terms of section 6A now, let's apply what I told you here to the scenario. So okay, sometimes you have to, in the context, you have to be, you can't just go through over information. You have to remember that information at the top of the scenario can apply to calculations at the end of your answer. So remember at the top of the scenario, they said that she was a 46-year-old resident of the Republic, and she had dependents in the form of a husband and two children. So that means that for this medical aid, they didn't specifically state who she was paying for or who got the benefits, but we assume that all of them got the benefits. So she had this medical aid for four beneficiaries, or including herself. Then excluding herself, it would be three dependents. So she had this medical aid scheme for four beneficiaries, including herself, and excluding herself for the other three dependents. So what I'm saying here is that there are four parties here, including the person, then also the other three dependents. So let's calculate the section A rebate applicable to the tax payable. Remember that after tax payable, we have to deduct the rebate from the tax payable. The rebates are only there to be deducted from tax payable. That's their purpose. So in terms of the section 68 rebate, and it's not really that difficult. Just have to know the number of people that are getting benefits from that medical aid scheme, and it must be registered. Remember, and throughout the scenario, they did say it was to a registered medical aid scheme. So section 6A. So section 6A now, what do we have? We said that it's 332. Yeah. Time is the first two. Remember, as per what was discussed in the, or what I was explaining on the slides. Then we'll also have your 224, 224. Wait. We'll also have your 224 in terms of the benefits to each additional dependent. So will be your 224 times 2. Hey, I'm still busy. Please come later. Please come later. I'm busy. Okay. So it will be your 224 times 2. So okay, the amount will be equal, the total amount. Yeah. So the total amount will be 1112. But remember, this is a monthly amount. This rebate applies monthly. So this rebate is applied per month. So what you have to do, she worked for the entire 12 months. So a rebate will be 112 times 12, and this will be equal to 13,334. And that will be deducted as a rebate, obviously. I didn't write the 15,714 because yeah, there wasn't a complex calculation there. That's the rebate for section 16A. Then for section 6B, remember that it was the excess medical aid contributions above your section 6A rebates. Let me check here. Remember these rates are applied per month, so 9%. So these are the excess of the rebates claimed above, yeah, including contributions made by the employer. So what will be this excess? And remember, we focus on qualifying expenditure and the excess of medical aid contributions. So the qualifying the qualifying expenditure, what is it? Uh, it is 94,910 rand. So we have your 94,910 rand qualifying expenditure. So it's 94,910 rand. Yeah. Then you have to plus it to your medical expenses. So you have to plus it to your medical expenditure. Medical expenditure. So when you plus it to your medical expenditure, there's the excess of the contributions. So it'll be 73,500 excess. 73,500 as per the scenario minus what? 144. But I want you to remember that her spouse is disabled, so that's why section 6b will apply in terms of the 33.3%. Remember the two categories above, because it doesn't mean that the qualifying expenditure can be for the taxpayer only, it can also be for the dependents. So 73,500 minus what is that amount? $60,156. Yeah, 60,156. Okay, then 94. Remember the spouse is disabled. Sorry about that. 2010, yeah. So the spouse is disabled. So the 3.3% would apply to this aggregated amount. So it'll be 3.3 shift percent times 60,000 156 shift plus 94. So it'll be 33.3 shift percent times 60,156 plus 94,910 bracket equals 1637, because you plus your excess and the qualifying expenditure, and that will be your section 6b rebate. Then let's continue with our slides or framework. Then after you have calculated your rebate section 6b, here's the calculation. Then you'll go to other taxes. Other taxes will simply deduct the employee's tax deduction and the provisional payments made from the tax payable. And after that, you'll get your final tax payable. And that will be the end of this question. At least it's at 2 o'clock. Will be the end of this question. So I don't know if you guys have a good memory, but I'm gonna check something here on the solution. So yeah, the solution is what I said, really, but the thing is the solution is what I said, but the thing is I did something wrong in terms of section 6B, but the rest like everything is right. But I did something wrong in terms of section 6B, but everything is right in terms of what I did. I don't know if you can remember what I did, but you'll just check it and compare it to the video because we'll upload the video. But yeah, everything I did, everything I did is correct. Even the taxable gain, yeah, everything is correct. Just this 6B. I don't know if I'm tired or not, because it is supposed to be the excess. Ish. Yes. The excess I got it wrong. The excess, that's the only thing I got wrong. So the excess now, the excess is based on the excess. Whether I was right in terms of the total contributions of the made, including the contribution made by the employer, but you had to deduct it to get the excess. You had to deduct like 3 times the section 6A rebate. So 3 times 13,3444. So about that one is wrong. This one. I had a feeling that it was wrong. This one is wrong. So what simply happened is that we got the rebate correct, the section 6A rebate correct, but in order for you to get the excess now, you have to multiply the section 6A rebates by 3 and deduct it from the total contribution, and that will be part of the amount that we use to calculate the section 6B rebate. But yeah, that was the only mistake. I'm sorry about that, but I hope I clarified it now, because it is based on the excess above this line, 3 times 6A, um 3 times the rebate recognized in 6A. So I just missed that. But yeah, I've come to the end of the session. And if there are any questions, you can ask me now. Any questions? Remember, I didn't do the taxable income thing because of my data got deleted somehow. Uh, and yeah, here's the assessed loss after deductions. Any questions? So close, because it seems like there aren't any questions. So I'm gonna end the window, close the window for questions in 5, 4, 3, 2, 1. Thank you guys for attending this session. Although I made one mistake, I'm sorry for that, but most of the information I taught you is as is, and you will successfully get most of your marks for this section, even close to 100%, since you've seen the mistake that I did. So I thank you a lot for attending this session, and I hope that you attend future sessions, as they will increase in quality and ensure that you really pass your tests. Yeah, and those guys, please don't forget, like, to send like to message me directly, so that I can send you the slides that I made. I'll just make an amendment. I'll make a correction to the slide over here. I'll make a correction to the slide over here. I'll be more specific here with the excess medical fee contributions. That the excess of 3 times the section 6A rebate recognized. I think that represents dependence, but yeah, I'll add it then. You guys can message me. So thank you guys. I'm ending the session now.